Credit cards have completely ruined people's lives. Some people drown in debt for decades because of them. My parents were a prime example of these kinds of people, and for most of my childhood, my parents were buried up to their neck in credit card debt. Unbeknownst to me, they were paying this debt down while struggling to pay the bills and keep a roof over my head. And it wasn't until I went to college that they finally were able to pay this debt off, and it wasn't until I got a credit card of my own that I understood how soul-sucking it can be to owe money to a credit lender. On the other hand, others can use their credit cards to their advantage, to build credit, travel for free, earn thousands in rewards, and set themselves up for financial freedom. So you may be thinking I'm sending a mixed message here. Are credit cards good or bad? Well, the answer to that question depends on how you use them. Using credit cards can lead to financial ruin, for sure, and they can even set you back decades. With that being said though, if you're in your late teens or early 20s, you should consider getting a credit card as soon as possible. Because if used correctly, credit cards can give you a head start and open up a world of opportunities for you. In this video, I'm going to talk about how to use credit cards to your advantage, but before I do, I want to briefly talk about what a credit card is. Alright, now the first thing I want to get out of the way is that a credit card is not free money. This is the first mistake that people often make. They see their credit limit and they spend that money like it was sitting in the palm of their hand. A credit card should be thought of as a short-term loan. When you buy something with a credit card, the bank pays for the item and you're responsible for paying them back later. For example, if you go to a coffee shop and pay for a cup of coffee with your credit card, the bank fronts you that money to complete the purchase. That money used to buy the coffee is added to your credit card balance. And once the billing cycle is over, you have to pay that balance down with your own money before the due date. If you don't, you're going to be charged interest on top of the cost of that cup of coffee. And that brings us to why people fear credit cards. Credit card interest rates, in my opinion, are predatory. When the billing cycle on your card ends, banks will give you a minimum payback amount that you owe. It's often a fraction, like 2 to 3% of the card balance, which may seem nice at first, but this is the trap that banks want you to fall for. If you don't pay that loaned amount listed on your balance in full by the due date, you could be paying an additional 20 to 30% interest depending on the card you have and your credit score. That interest is how banks are making money on these credit cards, and interest rates of 20 to 30% are essentially impossible to outperform by investing or any other method. This is how people are ruined by credit cards, and why financial creators always tell you that if you want to get your finances in order, you need to pay off these cards first. It's important to know this concept so that you can use these cards to your advantage, not be taken advantage of. My parents fell for the trap of credit cards, albeit in a different sort of way. After the 2008 recession, my dad was laid off from his job and was out of work for about a year and a half. During this time, my parents had to provide for me and my sibling on my mom's income alone, which at the time wasn't very much. To pay for everything, they started putting their expenses on credit cards, spending money they didn't have, and paying that high interest without making a dent into the owed amount. Eventually, my dad found another job and was eventually able to start making larger payments towards the debt and attack the credit cards with the highest interest rates first. This method of paying down debt is called debt avalanche, and it's the most efficient way to reduce the amount of interest that you pay. Their experience with credit cards was rough, but it taught me an important lesson of how to use them. People like Dave Ramsey will tell you that credit cards are evil and share horror stories like the ones my parents experienced, but if you know how to use a credit card properly and are disciplined with them, you can get rewards, earn free trips, and get access to discounts you could never access without them. When you first get a credit card, you need to have the mindset that you're spending your own money when you use one, because you are. That means when you make a payment, plan to pay it off before the due date. If you pay off the balance in full before the due date, you owe no interest at all. That way, you can reap the benefits of cash back, travel miles, or other benefits based on the card with no downsides. The better your credit score, the better the credit cards you can get approved for. Now, this is what I do. I check my credit card balance every week, and I always make sure to check in before the billing cycle ends. I have those dates memorized in my head, so that I can ensure that it's paid in full well before the due date. You can set a reminder on your phone the day before the due date, paid off weekly like I do, or even check it daily. It really doesn't matter. Whatever system works best for you to ensure you're getting the benefits of the card and paying the balance in full before the due date, that's really all that matters. No interest, no downside. Now, I'm going to explain in a little bit here how to apply for a credit card and the different types of benefits you can get. But I want you to understand that the benefits you get from these credit cards are only worth it if you would have spent that amount of money anyways. Don't spend money on a credit card just to get the benefit of it. Only spend money on a card if it was something you would have bought already. Some cards will offer sign-up bonuses. For example, a card may offer you $200 cash back if you spend $1,500 in the first 3 months. You don't want to go ahead and spend $1,500 on something just because you can get that $200 back. It's only worth it if you're already going to spend the money. Treat it as your own money and take advantage of the benefits. If you're still watching this video, you may still be wondering, why do I need to get a credit card? Well, there's a couple reasons, and financially responsible people know these very well. Because when used correctly, credit cards come with some pretty major advantages. The first thing is building credit history. Whether people like it or not, modern life runs on credit. Your credit score can affect whether you get approved for an apartment, a car loan, a mortgage, and even sometimes influence insurance rates. And one of the easiest ways to build credit history is by responsibly using a credit card. Every month you use your card and pay it off on time, you're essentially building a track record that says, hey, this person can borrow money responsibly. Over time, that helps build your credit score. Now, obviously, a credit score isn't the only thing that matters financially, but in today's system, it does matter. Another major benefit is fraud protection. And honestly, this is one of the most underrated reasons to use a card. If someone steals your debit card information, that money is taken directly from your bank account. That's your money disappearing. But with a credit card, it's the bank's money that's on the line first. This usually makes fraud disputes easier, faster, and less financially stressful. Then there are the rewards that these credit cards offer. Cash back, travel points, sign-up bonuses. Some people are earning hundreds or even thousands of dollars worth of rewards every year just from using a card for normal purchases. Now, these purchases should be purchases that they were already going to make. And that's the important part, normal purchases. Not just spending extra money to chase down points or cash back. Because getting 2% cash back doesn't magically become a good deal if you're paying a 25% interest rate on a balance you couldn't afford in the first place. That completely defeats the point. But if you already have disciplined spending habits, rewards can be valuable, and that's really the difference. Financially irresponsible people use credit cards to spend money they don't have, and financially responsible people use credit cards to optimize spending the way they were already going to do. Same tool, completely different outcome. And in a weird way, responsible credit card users are basically extracting value from the banking system instead of being exploited by it. Me personally, the card I've been using for the past few years, it gives me travel miles, and I get about 2 free round-trip flights back home every year just by using the card and making payments I already was going to spend money on. But in order to do that, you actually need the right card. Now we're going to go through how to choose your first credit card and some of the things you need to consider. Choosing your first credit card can feel very intimidating, especially if you just turned 18 and banks have started throwing credit card offers at you, because nobody really explains this stuff. People either explain credit cards as if they're the worst thing on earth or over-exaggerate and say they're the best thing ever. But before choosing a card, the first thing you need to understand is your credit score. Now, I talked a little bit about it earlier, but your credit score is essentially your history of paying things back responsibly. The more you pay back loans or debt responsibly, the higher your credit score tends to be. Your credit score is influenced by things like whether you're making payments on time, how long you've had credit, how much of your credit limit you use, and how often you apply for new credit. Now, that how long you've had credit part is one of the key reasons why you should get a credit card early if you know how to use it correctly. Because once you get that credit card on your credit history, That's contributing towards your credit age and building that history of making payments. If you've never had a credit card before though, you probably don't have much credit history yet, and that's normal. That's why there are beginner cards that exist. There are student cards designed just for people who are starting out, or students maybe in college. They'll typically offer them to you with a small credit limit, somewhere around $500. Now, there's another option called secured cards. With a secured card, you usually put down a refundable deposit first, which lowers the bank's risk. After building a history of responsible payments, you can often upgrade from these student cards or secured cards to a normal unsecured card later. These unsecured credit cards are the credit cards that you hear me talking about with the travel miles, the cash back, all of the really good benefits that you can get out of some of the best credit cards. You can monitor your credit score using apps like Credit Karma or directly through a whole lot of different banking apps. Now, when you're choosing a card, there are 5 main things you should pay attention to. First, the rewards. What kind of rewards is this card going to give me for spending money with the card? Some cards offer a simple cash back, 1%, 2%. Sometimes you'll get 3, 4, 5% if you spend in certain categories. Whereas others will focus just on travel points. They'll give you miles to use with a certain airline or through a certain travel agency that can give you free flights around the country or around the world. For most beginners though, cashback cards are honestly the easiest and the safest option. They're simple, straightforward, and they don't have any complicated point systems. Now, the second thing you need to consider is annual fees. Some premium cards charge yearly fees in exchange for extra perks and rewards. Sometimes those benefits are worth it, but for beginners, paying an annual fee usually isn't necessary. There's usually a certain amount of money that you have to be spending on average every year before these cards actually become worth it, and that's kind of up to you to determine how much money you spend a year and what you spend it on, and if that card would actually be useful for you. There are plenty of great no-fee cards available. You don't have to pay an annual fee. Me personally, I don't have an annual fee card at the moment. I have a few that I'm considering, but I'm not 100% certain if I want to make the move and go towards that yet. The third thing you need to consider is APY, also known as the interest rate on these cards. Now, ideally, this shouldn't really matter very much, because you should be paying the full balance every single month anyways. But life happens, and if you make a mistake or something happens where you just have to make a purchase on a credit card that you don't have the money for, in those kinds of scenarios, lower interest rates are still going to be better. So if something like that may happen, you want to use a credit card with the lowest interest rate out of your selection of credit cards. The fourth thing you may want to consider are foreign transaction fees. Some cards may charge extra fees when making purchases internationally. For me, this isn't really a concern, but if you travel a lot or even buy things online from international companies, this can matter a whole lot more than people realize. Finally, you want to consider the issuing bank itself, because not all banks are equal. Customer service matters, fraud protection matters, and the mobile app itself matters. Some major issuers you may want to consider include Chase Bank, American Express, Capital One, Discover. These are some of the biggest names in the credit card industry, but really you want to do your own research and find out what credit card company or bank would be best for you. At the end of the day though, your first credit card honestly doesn't need to be perfect. The goal isn't to be an expert and use every card possible to the best of its ability overnight. The goal is to just start building responsible financial habits early. Credit cards are kind of like fire. If you misuse them, they can burn your life down. But if you understand how they work and respect them, they can become one of the most useful financial tools available. My parents' experience with debt taught me how dangerous credit cards can be, but it also taught me something equally important. Avoiding financial tools completely isn't the answer. Understanding them is, because at the end of each day, credit cards aren't really good or bad, they just amplify the habits of the person using them. I hope this video helped you, and if it did, please leave a like on the video. It helps me to figure out what kind of content my audience likes, and what kind of videos I should continue to make. And if you don't want to miss another video, please also consider subscribing. I make videos just like this one every week, So if you stick around, I'll see you in the next one.